SN7. We are closer to demo. We are nearing demo, introduction to demo. So we'll be wrapping up for the next few days. Okay, so in this video we will deal with about, because we realize that we've been talking about prices and all those things, the take profits, the pips and everything, but then we skipped the basic. It's so easy, so that's why we sort of missed it. So let's tackle this, the basic of trading, the buy and sell. What happens when you buy, what happens when you sell, and how the price gets given to you. So in this video we'll be dealing with it. So when you trade Forex, remember Forex is strictly currencies. Forex is currencies. Forex is not trading gold or coffee or all those things. There's commodities, equities, many things in trading, but then Forex deals with currency exchange. It's currency exchanging. So as we mentioned, they go in pairs. You have currencies going in pairs. So when you buy or sell, you sell a currency pair. Let's have this, for example. Remember, this is a currency pair. So you will either buy or sell this currency pair. You will either buy or sell. So you may buy or sell for a number of reasons. If you can do your own analysis, you can use your own strategy to come to this buy or sell conclusion. And if you have a signals provider, they will tell you to buy or sell the currency pair, whichever currency pair that you. So in this example, throughout I'll be using Euro USD. So let's get into it. Let's say it's Euro USD. It's Euro USD. This is the currency pair. So whichever method, if I may say, will tell you to buy or sell this currency pair. Let's start off with the buy. If you remember this, before we get into things, remember this has a price. This currency pair has a price. So let's say the price is 1.4650. The price is given like this. Then it was a buy. Let's say it was a buy. This was a buy. We're told buy Euro USD. Then when you went to the platform and said buy, you were given this currency pair at this price. You're given that currency pair at that price. So when you buy, look carefully. I'm talking about how you will make profit or loss. This is for say buy. This is for a buy, right? So look at this price. It's 1.4650. The moment this price goes up, remember this price is when spread has been given or commission has been charged, they will give it to you at this price. It might start off as a negative trade, but then let's take this price as it is. Speak in hypothetical terms. So 1.4650 is your price, and you bought. So when this price goes up, let's say to 1.4680, you can see that it has gone up by 30 pips. You'll make what we call profit because you bought, and the stock, I don't know if I can call it stock because we already have stocks in trading. but then I am referring to stock as in this currency pair. Okay, let's just call it the currency pair. When you buy and then the price goes up, price went up by 30 pips, you will see what we call profit. You've profited because you bought, then price went up. That means you bought lower, then price went high. That means you've made profit. Just like in the example of bread. If you buy bread for $2, now the price is $3. That means you have actually made profit. If you were to sell that bread or if you were to close your order, you've made $1 profit. So in the case of currency pairs, you bought at a certain price, then price went up. That means you've gained. You've gained by a certain number of pips. Remember, pips is what we use to calculate price. So you've made profit. Then we're still in a buy scenario. If price was to drop, let's say 1.4, do this, 1.4630. That means prices went down by 20 pips. You will see what we call a loss. It will be red. Profit is in blue, then loss is in red. When you are using your cell phone, but then with PCs, usually the prices are just black. You just see with a negative sign in the front, and you know that it's a loss. So right now you've bought, then price went down. You'll experience what we call a loss because price went opposite to what you predicted it. Let me use this. It's a chart. Let's see. For Euro USD. Okay. Price was at 1.4650. Then this is the market. Let's see. This is the starting price. 1.4650. So you placed a buy order, or you bought. So when price goes up, let's say it reaches 1.4680, you will make profit, and we'll say it's 30 pips profit. That's your profit. You've made profit. When you close that order, you will see you have made 30 pips profit. But then if it's still running, that means you are in profit by 30 pips. It's not profit until you've closed it. You are still in profit because it can go down. And as it goes down and passes, as it goes down and passes your entry price, let's say it's now at 1.4630. This is a loss. I don't know if I'll find space, but then this is a loss by 20 pips. This is a loss. You are experiencing a loss, and if you close, that means you've lost 20 pips. 20 pips will be given. Remember, we have the lot sizes. And the number of pips. Then it will give you your profit or your loss. So this is what actually happens. Remember, this was for a buy. Remember, if you buy and price goes up, you see profit. If price goes down, you see a loss. And remember, the price that we're talking about is your entry price. It's the price which you bought at for a buy. The price which you bought at. In this case, it's this one. They've given you this price. If you bought at this price, then price rises, you've made profit or you are making profit. Remember, it's not profit until it's closed, because as I mentioned, it can go down. So you bought at this price, it rose, price went up, you make profit. You bought at this price and price fell, price went down, you made a loss, or you are making a loss. Remember, we'll conclude when you close. So this is the idea of what happens. So let's go to a sell. Sell is the opposite. Remember, you have two options: buy or sell. So it's Euro USD. It's at this price, 1.6450. Then the order is a sell. The order is a sell. So when at this price, let's see, okay, 1.6450. If price goes down, remember we're in a sell now. If price goes down, let's see, 1.645, no, yeah, 1.6430, you have made profit in this case, because it's a sell. You've made profit in this case, and it's 20 pips. I hope you can see the difference, though the numbers are still the same, but then due to different orders, that means the different directions will yield the different results. So when you sold and price goes down, price went down, you will make profit in this case. In the case of a sell, if price goes down, you make profit. Then if it rises, say 1.6480, you make a loss. This is a loss by 30 pips. I hope you can see the difference. I hope you can see the difference. If you sold this pair, then the price of this pair goes down. You made profit. If it goes up, no. Remember talking about it close, but then you are making profit. If it goes up, you are making a loss. So this is it. Let me further add another example, like with the buy, Euro USD. That's at this price, 1.4650. 1.4650. That's your price for a sell. If the market goes down, let's say it's at 1.4630, you're making profit, and that's by 20 pips. We'll say you are in 20 pips profit. In 20 pips profit. Then let's say the market price goes up 1.4680. That's 30 pip or 30 pips loss, in a loss of 30 pips, because price went against you. Price went against you. You sold and price went up. It went against you. So this is a loss. And if you sold and price went down, it went for you. It's profit. I hope this is clear. If it's not clear, we're still going to see these things on demo. You can also ask questions if you don't understand. So, as I mentioned, when you buy, and price rises, you make profit. This is for a buy. And if price falls, goes down, you start making a loss. If you sell and price goes up, you make a loss. But then if price goes down, you make profit. This is a case for trading. And then right now, since we're dealing with Forex, it's currency trading. And then even in other forms of trading, this is how it works. This is how it works. If you buy, price rises, you make profit. If you buy and price drops, you make a loss. If you sell and price rises, you make a loss. And if you sell, price drops, you make profit. Or if you sell and price drops, you make profit. And if you sell and price rises, you make a loss. This is how it is. That's why people will tell you to buy low and sell high. Because if you buy low, there's a high chance that price will rise. Therefore, you'll make profit. And if you sell high, there's a high chance that price will drop because it's at its highest. So you'll make profit when price drops. For a sell or a bear, remember sellers are bears. If you go bearish and price goes low, you make profit. If you go bullish or in a buy, the buyers are bulls. If you go bullish and price rises, you make profit. I hope this makes sense. And next, we'll be dealing with the account-based currency. The account-based currency, or base is a base account currency, but then we'll be dealing with that. When you deposit into your account, whatever or in whichever place you may be, wherever you may be, you'll be using your own currency to make a deposit. But then it will be converted, like your broker will tell you that, okay, we offer an account in this currency, USD, Euro, GBP, ZAR, KWG. See, just like that, they will tell you. But then you might find that wherever you are, let's say you're in South Africa, you're using SA. Okay, sorry for that. You are using ZAR. That's our currency. But then our broker doesn't have this option as deposit. It has USD and Euro and GBP. So let's say you pick a USD account. You want your base currency to be USD for trading. That means that you'll have to convert this ZAR to USD. If you are given a USD, if you've chosen USD as your base currency, base currency is the currency which you will be using. You'll see it as your capital. It's known as capital, your base currency. That means you'll have to convert from ZAR to USD when you deposit. But then we'll touch those as time goes on. Right now, our main focus was on the buy and the sell. What happens when you buy, when you sell? This was just a briefing on what you may expect to see. You'll be seeing these things on demo and then when you go live. But then hopefully when you go live, you'll have proper experience and proper guidance by your side. So yeah, this is it for now. We can also do the stop loss and take profit orders. We can also do them for a buy. Yeah, let's add them. Let's say buy. Okay, let's just start off with a stop loss and take profit. TP. Okay, let me start with stop loss. It's more important. SL. This is your stop loss. This is your stop loss. And the stop loss, remember, in a buy scenario, if you buy and price goes down, you experience a loss. And in a sell scenario, if you sell and price goes up, you experience a loss. So this is where this comes in. This is an automatic order. This is an automatic order. You will set it. You will set it so it will stop you from encountering further losses. It will close your order automatically, a stop loss. It might be that you're not around, because sometimes we have people who are working and they're also trading, or who are studying and also trading. So you won't always be around to monitor your trades or close your trades manually. So in order for you to not blow your account, you'll have to put a stop loss if you can't monitor. And in some cases, like fundamentals, price moves very fast. It moves very fast. Then you find that when you actually press the close trade, it's account gone, because price moves very fast during fundamentals. So a stop loss is an order which you just set. You will set us at a certain price, which will stop you from losing. Let's say, let's give an example. We have the same price of 1.6. Okay, I've forgotten that price. I might mix things up. But then let's use this price, 1.6450. If you have this price and you are in, let's say, buy, which direction should the market go in order for you to experience a loss, or where should price go in order for you to experience a loss? It's down, right? When you buy and price goes down, you experience a loss. So that means your stop loss will be set at a price lower than your entry price or your buying price. I hope this makes sense. Your stop loss, let's do this. This is your entry price, 1.6450. Your stop loss will be set lower, and usually the brokers don't allow you to set it by a minimum of 5 pips. Yes, because you cannot just enter then set your stop loss at, let's say this is your entry price. Remember, we're dealing with pips. So you cannot set at the price of 1.6449. That's one pip. That's a 1 pip difference. It won't allow that, because it's impossible. Because remember, we said your trade has to go in a loss first before it goes into profit. So that means you'll be stopped out the moment you've just entered. So it has to be a safe distance. But then we're still going to come to that. Right now, we're still dealing with the basics of a stop loss. A stop loss will be put in a direction which is opposite to your trade. Like, for instance, in a buy, you'll put your stop loss lower than your entry point, because that's where you start experiencing a loss. Remember, in a buy, we said if you buy then price goes low, you start experiencing a loss. So for you to stop experiencing further losses than you are already experiencing them, you put your stop loss. And if you put your stop loss, that doesn't mean the moment your stop loss is hit, then your loss will be cancelled. You are still going to take in that loss. The trade is going to close automatically in that loss. But then it has saved you from losing. Let's say you set a stop loss of about 30 pips. That means the price for your SL, the price for your stop loss, will be at 1.64. It's a buy. Let's see. buy, your stop loss will be at 30. That's 20 pips down. Because you've bought, then price went down, you started losing. So 30 pips, no, 30 pips, if I said 30 pips, sorry, that's 2. That's 20. That's 30 pips down. That's your stop loss price. So let's just say for this 30 pips, you went in with a lot size of 0.10. That means you'll lose around $30. The trade will close, and then your new balance will be $30 lesser than the one which you entered the trade with. So let's say you didn't put a stop loss, then price fell about 300 pips. That means you would have lost about $300. But then since you put your stop loss, you were able to lose $30 at 30 pips. I hope this makes sense. This is for a buy. For a buy, your stop loss is set lower than your entry price, lower than your entry point. Then for a sell, remember, if you sell, price goes up, you start making a loss. So let's say 16450. Let's say you set a stop loss of 30 pips. You will add 30 pips to this price. It's a higher price, remember. That means it's 1.6480. That's your stop loss. Because remember, when you sell and price goes up, you experience a loss. If it goes down, you experience profit. So 1.6480 will be your stop loss price. That's 30 pips if you're told to put a stop loss of 30 pips. Because in some cases, you'll be depends on your signal provider or how you prefer it. You might be given the price for your stop loss, like put SL at this price, or they might say SL is at 30 pips, depending on your entry. So this is the stop loss for a sell. The stop loss for a sell is higher than the entry price, and the stop loss for a buy is lower. Let me just write this down. SL for a sell. The stop loss for a sell order, when you've sold, it's higher. It's higher than the entry price. And for SL, stop loss for a buy, it's lower than the entry price. It should be lower. The price you insert there should be lower. Then let's go to the TP. The TP is the take profit. This is the take profit. So we'll start off with a buy. For a buy, let's say a buy. Take profit for a buy. Take profit for a buy will be higher than your entry price. Remember, if you buy, then price goes up or goes high or rises, you are in profit. You see profit. We say you see profit. Let's say this is your entry price. Then you bought. Then it went high to this 6480. If your take profit is set at this price, or as you can see, it's 30 pips, the order will automatically close if you're not around. It will close at this price. Then you've gained a profit of 30 pips. That's your take profit. It's an automatic order. It will close at this price. And as you can see, it's a higher price. It's a higher price than your entry price. So this is your take profit for a buy. Then TP for a sell. The TP for a sell will be lower than your entry price. 645. it will be lower than your entry price. Let's say 1.6430. That's around 20 pips. So your TP will be lower for a sell. So let's do this. Because remember, a sell, if you sell and price goes down, or price drops, you're making profit. So your take profit will be in that direction of your sell, which is lower than your entry price. So that's the TP for a buy will be set at a price which is higher than the entry price. Higher than the entry price. Then your TP, your take profit for a sell, will be set at a price which is lower than your entry price. Yeah, that's it. Let's leave here. Let's cut this lesson here. Then we'll continue.